Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, your march higher simply continues, guys. The bulls just grinding away at these charts to the upside. SPY and QQQ both getting some very nice gains on the day, but financials and healthcare pulling ever so slightly back. So the rally today was not so much broad-based. It was once again largely due to some of your big tech names. However, the rotation within the technology sector, so your intra-sector rotation, has been very healthy as of this week. We've been noting a significant pullback in semiconductors over the past 5-6 days of trading. And the market, at least in the technology sector, has been making up for the lack of gains in semiconductors by pouring into other sectors that have been left behind. Notably, some of your software as a service plays, right? Take a look at some of the names that were up the most on the day and that have been really creeping up over the course of the week. Names that have been kind of left behind, guys. Think of your cybersecurity plays. Zscaler up about 6% today. Palo Alto up about 5% off of an upgrade as well. Even some things like Datadog. CRM finally coming back as well with a beautiful 4% day. Was up almost 5.5% at one single point. And even Adobe as well, right? One of these other software as a service plays that got left behind finally starting to show signs of life. They are really making up for that rotation to the downside in semiconductors. Your big tech names still performing very, very well, but nice to see some rotation between infrastructure and software finally. We've been waiting for that one for a while. As a whole though, guys, right? Very, very decent market today. Even the bottom half of the market participating, everything pretty much except for financials and healthcare. And we kind of hinted at that yesterday, how when QQQ is moving to the upside, right? You may see some slowdowns in financials and in a little bit of healthcare as well, so long as they're balancing each other out, right? Last week was a question. QQQ was actually pulling to the downside and financials and healthcare were going up. So as long as this rotation remains healthy, guys, I still don't see any major red flags in the market so far. So now let's take a look, guys, what we're going to cover in today's video. We're going to obviously go over one earnings that I have prepared for you guys. We're going to cover Nike earnings. It's going to be a big one here, guys, because they reported after the close today. So we'll do a very quick recap on that. Thereafter, we're going to tackle our major technical analysis rundown in terms of our major market indexes, and then dive into our big tech names and see how those are shaping out as well. And to conclude, we are going to take a look into my portfolio for a few extra trades made today. So without further ado, guys, let's get right into today's video. SPY up about 0.16%, QQQ up a nice 0.26%, and the rotation does continue. The main thing that we had today, guys, in terms of the macro was a GDP result, right? So keep in mind, guys, these come out quarterly. However, they get revised every single month. So this one is not a new print. It is still the Q1 numbers. However, it is the third revision for the Q1 numbers, and they pretty much came in line at the 1.4%. We will get the Q2 GDP numbers next month as this quarter closes in about 3-4 days worth of calendar days, of course, right? So GDP, not so much to move the markets today. We'll really have to wait for the Q2 estimates to come out, but the Q2 estimates are also right around here, 1.3, 1.4%. So the economy is cooling down, but let's remember, that is exactly what the Federal Reserve wants. They want the economy to cool down, consumer spending cool down, and we've seen consumer spending cool down because we've watched all the companies report earnings, especially the ones that are most in line with consumer, either discretionary spending or consumer staples. A lot of companies, guys, whether it's Walmart, Costco, a number of other issuers like dollar stores, Nike, Starbucks, a lot of people hinting at the fact that the consumer is slightly slowing down, which is leading to the economy slowing down as well, because obviously your consumer spending is the largest component of your internal GDP. So the economy is slowing, but in my opinion, no major red flags to say that we're approaching somewhat like of a recession just yet, right? Tomorrow's going to be a big day as well. We get PCE inflation data, and the expectation is about 2.6%. The previous one was about 2.8. Keep in mind, guys, PCE all throughout this year has been about 2.5, 2.7%. So if we can really come in line here at about 2.6, even 2.5, I do believe the market will respond quite well to that. So with all that out of the way, guys, before we jump into our technicals, let's take a look, at some Nike earnings. So Nike coming out with earnings after the bell, they are down about 6.65%. Unfortunately, yet again, guys, the quarter was just not good, and the year-over-year comparisons as well at Nike were just not good. Once again, reiterating, guys, consumer spending is not what it was last year or even in 2022. So let's take a deep dive into their numbers and see if Nike is maybe rounding the corner towards getting some of that consumer spending back, or whether or not they still believe that the guidance is going to come in a little bit light. So they did have a nice beat here on EPS, little jump in profitability here by about 21%. That's very good, but they missed on revenue, guys. Their revenue is just not growing. Now, the only reason they're improving profitability, despite the revenue not growing too much, they were able to restructure a lot of their costs, and their cost control has been very good. So despite the fact that they have the same revenues, their costs are lower, which does improve your bottom line profit margins. The only red flag is the company is just not growing, guys. And when it's not growing, you can't be surprised that we continue to sell to the downside, because a stock's price is a reflection of future growth and future cash flows. And if those aren't growing, well, unfortunately, Wall Street will not respond well in terms of price action. So let's take a look at Nike, guys, exactly what the company is doing right now in terms of their quarter, right? Then I'll do a quick little summary for you guys. So in terms of the quarter that just came out, guys, here is what management had to say about the quarter. So revenue pretty much came in almost flat, right? 51.4 billion versus 51.2. That is just not good enough here, guys. And quarter over quarter, measuring Q4 of this year versus Q4 last year, they run one fiscal quarter behind. That was actually down 2%, so not the best either. Let's take a look at what management had to say about this. And you will see, guys, the tone from management is cautiously optimistic at best. So here's what the CEO had to say. We are taking our near-term challenges head on while making continued progress in the areas that matter most to Nike's future, serving the athlete through performance innovation, moving at the pace of the consumer, and growing the complete marketplace, said the CEO. I'm confident that our teams are lining up our competitive advantages to create greater impact for our business. That's what the CEO had to say. Now take a look at what the CFO had to say. He manages the numbers, right? So here it goes. We are driving better balance across our portfolio. While we are encouraged by our progress, our fourth quarter results highlighted challenges that have led us to update our fiscal 25 outlook to the downside. Guidance is not the best, guys. We are taking actions to reposition Nike to be more competitive and to drive sustainable, profitable, long-term growth. So as I said, guys, you can tell, right? They are still optimistic because they have to be in the face of analysts, of course, right? But at best, this tone is cautiously optimistic. So here's one of the reasons for some of your profitability increases. Selling and administrative expenses decreased 7%. Now, Nike over the past 6 to 9 months, because of the consumer slowdown, have been very, very diligent on bringing costs down. That's anything from employee count, they laid off a bunch of people, and also sales and marketing budgets have come down as well, looking to do a little bit of cost control. And that actually was significantly expressed here in that 7% decrease when measuring on a quarter over quarter basis. So at least they're doing something right. Now, let's get into a bit more in terms of the balance sheet. So the problem with Nike as well is in 2022, they built up so much inventory because of the supply chain constraints that used to be occurred back in the market then. So they built up a ton of inventory, and then what happened? Well, unfortunately, rates skyrocketed. The consumer started dwindling down on its savings, started pulling back on services, on services and goods spend, and now as a result, Nike just got trapped with all of that inventory. And you guys know when it comes to fashion, everybody wants to have the latest and newest thing, right? So it's very difficult for Nike to sell shoes that are potentially models from 1 to 2 years ago. So the only way they can sell that is by putting deep liquidation and deep sales on those products. And obviously that is not very good for your bottom line margins, right? You don't want to have to floor item prices to be able to liquidate that inventory. So inventory has been a recurring problem for them over the past year. It has been coming down though. Inventories for Nike were about 7.5 billion, down 11% compared to the prior year, reflecting a decrease in units. Last quarter, when we did this same analysis, inventories were about 8.4 billion. So they are coming down, guys, but they're not coming down in leaps and bounds, right? They're coming down ever so gradually on a quarter over quarter basis. So hopefully they'll be able to liquidate a lot more of this by the year end. Now, cash and cash equivalents were 11.6 billion. That was up about $1 billion. So Nike has never had a problem with the balance sheet. in terms of the amount of assets that they have versus the debt. The problem with the company right now is it's not growing, and the CEO has criticized his company over a lack of innovation, and that is what they're trying to tackle. So the balance sheet is not the issue. The issue is their growth in light of lower consumer spending. So let's take a look here as well. They did do a good job of repurchasing shares. You can see that they had an $18 billion share repurchase program approved in June of 2022. And so far, they've roughly done about half of that, right? So they've done about $9.1 billion, so still about $9 billion outstanding in share repurchases, which is good for the company. That is roughly still about 6% of shares outstanding at the current price. So they still do have a large amount of money to buy back shares with to kind of set a floor for the share prices, right? At least they'll be backstopping too much damage to the downside. And now we get into the numbers, guys, and you will see the reason I'm showing you the numbers is because they're really not that good. Take a look, 3 months ended. So here's your quarter, right? Revenues down 2%. Yes, the cost of goods sold is down more than the revenues, which gives them an increase in gross profit. So this is good. The gross profit is good, but this revenue decline is not good, guys. Take a look, year-over-year basis, guys. The company did not grow revenue at all. That is a problem when you're such a large company like Nike, right? So no growth year-over-year, 2% decline in cost of goods sold, which gives them a 3% bump in profitability. So really mixed story for Nike right here, and that just continues, right? You can see bottom line net income is better because of the cost control, but once again, revenues are just not growing. Inventories, once again, you can see here, decrease in inventories to 7.5 bill from about 8.4 billion, which is a decent amount of decrease, but still, guys, that is a lot of money trapped in inventories right now. We really need to see this get lower. Usually Nike only is supposed to run, I mean, years prior to the pandemic, Nike was only ever running about $2.5 billion in inventory at any given point. So this still is 3 times the normal amount, guys. It is just too much, and Wall Street just does not like it, which is why the share price just has not been doing much of anything for the last 6 to 9 months. Take a look at all of their segments, guys, and you will also see it just doesn't paint the best picture. North America, footwear, let's take the 3 months ended, right? Quarter, down 6%, year over year, down 2%. Their biggest segment, footwear, guys, they are down quarter over quarter and year over year. Apparel, their second biggest segment, it was decent in North America, 4% on the quarter, but year over year, 0. No growth in apparel. The only saving grace is their equipment line of business right here, but you can see it's so tiny, right? So tiny, such a tiny line of business that it really doesn't impact the bottom line, even though the gains were substantial on a quarter over quarter and year over year basis as well. That's North America. The problems continue. Here's EMEA, right? Europe, Middle East, and Africa, right? Footwear. Totals, 1% year over year change. That is not going to get the job done. 6% drop in apparel. Equipment, once again, very decent numbers, but just a small portion of that market. Greater China, a location that's been very looked upon by Wall Street and other investors alike to see whether or not the growth story is back in China. Well, they are growing in China, guys, but it's nothing extremely impressive, right? So footwear, I'll give them that, quarter over quarter, 6%, year over year, 6%, decent. Apparel, 9% quarter over quarter. Apparel, 14% year over year. That's fairly decent as well. And the equipment, you can see, guys, only $46 million quarter over quarter, and year over year, $165 million. It's not going to move the mark. So these percentages, even though they do appear very good, it's just not going to move the mark. So China, surprisingly, the economy that's currently in a recession right now, outperforming every single other market for Nike. That is a bit of an outlier in my opinion, right? So just not doing the best at all right now, guys. That's why I brought you through a bit of the numbers. I think that's pretty much everything I highlighted, but just to do a quick little summary here, right? So China sales are up, which is good. Inventory is down. Their debt is okay. Let's take a look here at their debt. Just to show you guys that the debt is really not a problem for the company, you can see here that they only run about $12 billion of debt. Cash and cash equivalents and the free cash flow is sitting roughly around $10 billion. So the balance sheet is really not the problem for the company. The problem is here, guys. Look at this EPS growth, right? No EPS growth for the last 4 years. That is not going to get the job done, guys. The stock's price is a reflection of the EPS growth. And when you don't have EPS growth, do not expect the stock price to go up. Growth at this point may be only returning next year, 2025. I know it says 2024 here, but Nike runs 1 calendar year ahead in terms of their fiscal statements. Revenue as well here, guys, right? Revenue stuck pretty much at the $51 billion mark. And even next year, not said to be increasing that much, only a couple percentage points, guys. It's it's just not going to get the job done. So Nike is not out of the water just yet, right? Free cash flow is decent. As I said, about $9-10 billion of buybacks remaining, about 6% of the float. That's good. CEO recognized the lack of innovation at Nike and they're working on it. And now I also asked guys for some anecdotal evidence, right? I have a lot of friends who are in the sneaker reselling game, and I've been asking them, how have their recent drops been going over the past 3 months? And every single one of my friends have said they're not getting it done. People don't have the same demand for them, and the products that Nike is putting out are just not good enough to get that extreme hype and get that immediate sellout of new collections, right? So it's not what it was last year. Also, this is maybe the one little bright spot for Nike is that the Olympics is coming up as a catalyst this current quarter, so maybe we could see a little bit of a bump in sales. Now, the revenue growth about 5.1% per year. Most of that is coming after next year. EPS growth at about 11%. That's not too bad. That gives them a forward PE at $89, which is right now the after hours share price, right? About $89, $88, let's call it. 23.7. At a first glance, it doesn't appear too high. But when we take this PE ratio as an expression of their EPS growth over time, you can see the PEG ratio is 2.15. Quick reminder, anything under 1 is good, anything between 1 and 2 is okay, and anything above 2 starts to get a little bit rich. So even Nike, guys, being crushed pretty much, let's call it for all intents and purposes, right? 54% off of their all-time highs. Is the company cheap? When we take a look at their growth, guys, it is not cheap. This company is significantly more expensive than even a company like Meta, who is at the all-time highs right now. Look at Meta's PEG ratio. That's why I say the share price and how much you are off the all-time highs doesn't matter, guys. It is completely irrelevant. Just because Nike is down 55% off the all-time highs, it doesn't mean anything. We have to look at how much we're paying for the company's future growth. And unfortunately, even at $87, $88, it is still a little bit expensive. I would be more in tune to maybe playing this company if we get closer to the $80 mark. That'll be really the lows of 2020 and even 2019. I would take a stab at it back there, guys. However, we have to be patient with this one because, as I said, the recovery story for Nike is not going to be a snap of the finger things. It relies on consumer discretionary spending going up, and that takes a lot of time. So it's not necessarily a Nike problem. It's an overall macroeconomic problem that a lot of companies, not only Nike, are facing right now. So I do like this company for the long term. It's a legacy brand. I don't think it's going anywhere. However, guys, don't expect, if we get into this position, do not expect a complete monstrous recovery to the all-time highs anytime soon. Could it be interesting to build a position in the lower $80 range and sit on it as part of a longer term strategy? Yes, but as of now, guys, nothing really groundbreaking in terms of positive changes for the company. So it appears as though we will still have to remain patient on this stock. That's pretty much everything we had for Nike. So hopefully you guys appreciated that. Now let's jump right into our analysis of the SPY, right? So let's take a look at the SPY right now. SPY looking quite decent as a whole, guys. Daily uptrend is still being maintained, looking very good. They're still trying to continue into this daily uptrend, right? Still looking to pretty much they've set the higher low right here, 542.59. And if we can take out the all-time highs, your daily uptrend simply continues. However, if we fail right here and roll over and break the lows of Monday's session, pretty much 542.40, well, then you're looking at a daily downtrend, and that will start a little bit of weekly consolidation, but the bulls have so much space on the weekly, guys. Anything above 518.53, looking for a little bit of a retest of this zone right here, and then potentially continue the weekly uptrend. So there's a lot of space for the bulls. Just keep an eye on this location right here. If we do drop 531, 530, start of your support zone, and the 12 weekly EMA is sitting right there. You can see SPY has done a great job of holding this 12 EMA ever since this most recent leg of the bull market has started. So looking very decent on SPY. Moving into QQQs now. QQQs also looking very, very healthy, guys. QQQs really been helped, as I said, by your software as a service company. So a lot of these companies that have been left behind, right? Cybersecurity, software as a service like CRM, Adobe, stuff like that. All of them have been left behind, but you can see as I went through them earlier, guys, Palo Alto looking good, Zscaler looking good, Datadog looking good as well, right? A lot of them looking good, even Fortinet starting to coming up. So what I did about a month ago is I bought a little bit of a position in this ETF called WCBR. It just takes all of the guessing work out of cybersecurity. If you don't know which cybersecurity is the best, which one you should go with, well, you may want to consider an ETF if you do want to have exposure. And now we are finally starting to break out, finally a new daily uptrend uptrend and looking to now reverse into a weekly uptrend after months and months of consolidation. So nice little swing trade opportunity if you're looking to build a position in cybersecurity. This ETF, very decent management fees, and the company, I mean, the ETF only has about 23, 24 holdings in it, and there's no Microsoft, no Apple, nothing. It is only pure form cybersecurity plays. So hopefully that is helpful for all you guys that may be interested in some cybersecurity activity. So in terms of the QQQ, guys, not looking too bad at all, right? Still a daily uptrend, still just looking for the bulls to really continue this daily uptrend to the upside. However, if we were to roll over, and that would be synonymous with a rollover of the hourly trend, let's say we lose that and start rolling over the daily, it'll be up to the bulls to protect 474. Lose 474, daily downtrend is underway, and then we'll just be looking for weekly consolidation on the Qs as well. Anything pretty much above 443, looking for a weekly higher low for the continuation of the uptrend. First line of defense support levels, guys, come in pretty much at that 455, 456 level, which lines up with the 12 EMA, looking very decent for the QQQs. No red flags. I really love seeing the intra-sector rotation, meaning when we have semiconductors pulling back, it's nice to see not only big tech players making up for it, but also your smaller SaaS companies that have been left behind. Now, moving into XLF financials. XLF looking pretty good, even though they are down for the day, right? The reason I say they're looking good is because we're not losing these lower levels. We absolutely have to maintain 40.4, guys. The bulls are looking for the daily trend change. We will see if they can get it done. If for every which reason QQQ pulls back over the next couple of days, we need financials to really start making up for those losses. So that is the next leg that I'll be looking out for. However, if we were to fail and set the daily downtrend and go into further consolidation, then we really have to be careful of this. As I said, guys, 40.4, line in the sand level, break that, weekly downtrend continues. Then we look out to the monthly to protect 39.73, which is your monthly higher low. This is very nice monthly consolidation at the top end of a move, and we're using prior all-time highs to support us right now. But we cannot lose this, guys. If we lose this to the downside, we may just have to revisit these lower levels, and that would not be good, guys. It would take the markets a long time, especially financials, to recover this. So this is really last chance to dance for the bulls. They haven't lost the major areas just yet, but they really need to start getting their butts in gear. And that really all starts with Visa and MasterCard, in my opinion. They have not participated in financials now for about 3 months, and it is getting a little bit dicey for these companies, right? Just because they represent such a large weight in financials as a whole, almost as much as the banks, right? So we really need to see them participate if you want your overall broader market index to start coming up. But I do still believe, guys, Visa and MasterCard at these lower support levels are very good trade opportunities. Look, we're really coming close to the 200-day moving average on Visa, and usually every single time we tag it in the context of an overall bull market, usually it's a very nice touch, and then go for those types of stocks. So looking decent on the credit card issuers. I am personally playing those dips. Now moving on to XLV. So XLV Healthcare looking not too bad either, even though it's down about 0.16%. XLV really looking to just continue this daily uptrend. So we need a break of the highs of last week, 147.78, to continue this daily uptrend higher. A lot of resistance up here, guys. So we're going to need a very big move. In my opinion, if QQQ pulls back, that is going to be the chance that XLV can really start rallying and pushing these levels. However, if we were to lose, guys, 144.56, your daily uptrend is lost. Maybe looking to a daily downtrend, and then it just be for more weekly consolidation at that point, guys. Anything above 140.54, looking for the continuation of a weekly higher low to get maybe that weekly trend change underway. Very tight accumulation in this level. It is pretty much, for all intents and purposes right now, guys, this is a rising or tightening wedge right now, right? So it's looking pretty good for that breakout to the upside. Healthcare usually a more defensive area. So if ever we get some pullbacks in some growth, I do expect institutions to be bidding this trade up higher. So all in all, healthcare not looking bad at all, guys. Still looking fairly decent. Just keep a watch on that rotation. Now moving into semiconductors. So semiconductors down about 0.79%. The slide continues on them. So we'll be looking for a break to the downside of 255.38. If we get a break of 255.38 to the downside, first daily downtrend, guys, since pretty much the month of April. And that should be notable to us, right? It would be daily downtrend. And then we maybe have to look out to these levels, 245, 240 in order to get some longer form support. Daily downtrend would simply mean that weekly consolidation is continuously underway. And the bulls have tons of space on the weekly, anything above 199, guys, just looking for that weekly higher low for the trend continuation eventually. So anything, if we start revisiting these 245, 240 levels could be a decent little location for the bulls to gather some support down here and maybe go for one leg higher, right? It's your previous all-time highs. The 12 EMA is sitting right there as well. would not be opposed to further semiconductor consolidation just because we've had such a significant rally. Any pullbacks, guys, in my opinion, just a great opportunity to start cooling down some of the RSIs on the higher time frames, right? The daily is already cooled down. Now we're cooling down the weekly. So very, very healthy cool down, in my opinion. No red flags for the sector as a whole. Moving on to IWM Russell right now. So IWM finally pushing up a little bit, 1%. You can see how correlated to yields it is, right? So whenever yields has a down day, Russell goes up and vice versa, right? So the Russell trying its best at a daily trend change attempt. So look, the bulls are trying for the daily trend change, need a break of 202.66 to really confirm daily trend change is underway and get above all of the moving averages that we've been kind of trapped below here since pretty much the end of the month of May. So looking pretty good, guys, doing a great job of setting the lows. And what that means on the weekly higher lows, now that we are in a daily uptrend swing, your weekly higher lows are most likely set right here at 179.69. We'll be looking for the bulls to really start approaching this 212 area, get some momentum and try and smash it here, guys. So nothing is for sure, right? It doesn't mean that we're necessarily going to do this right away. It could just develop into a tightening range as long as there's still some uncertainty about the timing of those interest rates coming down. Where I really like the Russell, I'm not saying it's going to get there, but let's say we just continue rolling over as the market does not favor the risk on trade. I'll be looking maybe to start a position in the lower 190s. I want to be a bit greedy with this one just because the sector is still out of favor until rates really start coming down. Now moving on to the Dow Jones lastly. So the Dow Jones not looking too bad at all, 0.09% to the upside. Dow Jones, I'll remind you, just trying to reset into a daily uptrend, right? Tried to get it going here, couldn't get it done, and now we have boom, big engulfing move. Trying to set the daily higher low and run. Where are we looking to set the daily higher low? Well, look what we're using as support here, guys, right? Prior resistance. This is now support right down here at about 38,900, and all of your moving averages are below us right now. So really need to see the bulls break up higher and crack above 39,563, get this daily uptrend well in motion, and start giving us some legs on this weekly trend expansion as well. Overall, guys, not looking too bad whatsoever. If for ever which reason we roll over and break yesterday's low, well, unfortunately, daily downtrend is started, and that is pretty much the end of your weekly move, and we may just go into a bit further weekly consolidation here. This level down here is extremely solid, talking about 38.5 down to about 38,000. Very, very strong area for the bulls to defend. I don't think that we're going to get through that unless we have some really big broad market pullbacks. Now, let's jump into our big tech talks, shall we? So Apple looking pretty good again, 0.4% to the upside. Apple has just really been on a tear, right? 3 days of consolidation and just right back up. So it didn't get too much. So what are the bulls looking to do? I'll remind you, we were in a daily uptrend and then they lost it, right? Daily downtrend was underway. The bulls have a decent sized bounce right now. So what we're looking to do, if the bulls cannot V-shape this entirely, we're looking for the two-step daily uptrend recovery process. Take a look at the size of the move. So far, the bulls have engulfed almost 75%, which does give them a very good chance whenever this move tops out, setting a daily higher low, anything pretty much above 206.71, and resetting that daily trend to the upside. However, if the bulls cannot get it done and we simply roll over to the downside, you guys know the drill. We'll just be looking for further weekly consolidation. And after 10 weeks of rally, guys, Apple definitely can afford to take maybe 1, 2, or even 3 weeks off and really just consolidate, cool off some of these timeframes, cool off your weekly RSI a little bit. And the daily is still relatively good right now, but would not be opposed to a little bit of a cool down here. So the trade that I'm looking for Apple myself personally is anything under 205. 205 down to 200 is going to be a juicy location where I may be looking to make a little bit of a swing trade because that is really close to our potential max drawdown, right? I don't think if ever we consolidate, I don't think the bears are really going to be able to get through 195, right? So if I'm getting as close as possible to 200, my risk is at 195, and then we're really targeting all-time high breakout. So it's a lot better risk reward than starting a position up here, even though Apple can continue running. Yes, we're looking for the risk reward to be favorable, guys. That's why I'm going to be a little bit more patient on this one. But as of now, guys, no red flags on Apple, looking very, very strong. Moving on to AMD. AMD also still just struggling right now, about 1.23% to the upside today. So very decent day by AMD, but we need more, right? What do we need by AMD? Need a daily uptrend conversion. No daily uptrends since all the way back here at the start of May. And since then, we've kind of been range bound and slightly down. So what we need to see is a break of 166. Give me a break of 166. Daily uptrend will be underway. We'll be now above all the moving averages, which we've been struggling with over the last 2 weeks of trading. And we'll also start breaking above above this area of consolidation, right? Prior support, huge resistance bound for AMD stock right there. So if we can really break above, it'll give the bulls a great opportunity to then use this location as support and reset higher and start expanding some of this weekly trend higher, right? What we really need to see is a break above and then start attacking the 175, 180 levels again, get this weekly upswing under motion. But as you guys know, the entire time that we're down here, I will be continuously writing short puts 152 all the way down to 155, depending on the price action, right? Deeper cuts in this level, then I obviously go for the 140 in the 140s. If we're all the way up here still, then I'll be going for the 152.50s, right? So 152.50 down to about 145, sweet spot for me for writing short puts right around that 200-day moving average, right? So looking fairly good. I'm not opposed to AMD consolidation. The stock isn't looking too bad whatsoever. Just be very careful, guys. If we do embark on a little bit further of a weekly downswing, the better value for the stock, in my opinion, is closer to 140. I will be swing trading it up here, guys. But if it comes down here, 140, 130, that is when I start thinking about leap call options and putting a little bit more size behind some of these trades. As of right now, we are in decent consolidation, guys, but the true value lies down here, in my opinion. That's why every time I do swing trade up here, I'm not going so heavy because I understand the risks of a broader semiconductor pullback. Even though AMD hasn't ran with the rest of them, have they, right? It can still be affected by the overall semiconductor market pulling back, which is why I'm giving myself a little bit of a margin of error, only playing larger size down here. Now moving on to Amazon. Give me a very quick second. Moving on to Amazon. Amazon with a monstrous day, guys, 2.19%, almost getting up to the 200 psychological level. So this entire time that we were down here, I was pretty much saying, guys, the next upswing is taking us into 200, and now we are pretty much here. So congratulations to all Amazon bulls out there. Amazon, huge daily uptrend in motion right now, really breaking above your all-time highs in the last 2 days, looking extremely strong. When this move tops out and we're due for a pullback, anything above 185, just going to be looking for a daily higher low for further trend continuation, looking very strong on Amazon. The bulls are in absolute full control. And if we do potentially revisit this level right here, coming maybe closer to the 192, 190 location, could be a great breakout, retest trade for a little bit of a run. The stop loss would go very tight here at about 185, and then we'd be targeting $200 breakout. So looking very decent for a swing trade as well. The weekly is looking absolutely stunning, guys. Gorgeous weekly uptrend in motion, no red flags. So the bulls are in full control of Amazon. This one for me, tough to really start a position up here and chase, but if we do retest maybe 190, could be a decent little area to re-add some positions. Moving on to Google right now. Google also so strong, guys. Beautiful daily uptrend by Google right now. As soon as this move does top out as well, we have a lot of space. Anything pretty much above 176, going to be looking for a daily higher low for further trend continuation. And this one right now looks pretty much like Amazon as well, right? Break above the all-time highs. If we do get a little bit of a retest right here, could be a juicy little swing trade opportunity. Pretty much try to enter as close as possible. 181, 180 can keep a very tight stop right here at about 176, because if it drops below that, it invalidates the trade continuation, because then it would be for some weekly pullback, right? So a little bit of a trade opportunity right there for Google. But all in all, guys, it is looking extremely strong. This one is a hold for me. Gorgeous weekly uptrend in motion, and the bulls have so much space. Even if we were to lose the daily uptrend right here, would just be for a little bit of weekly consolidation, and anything above 170, 141, just looking for a weekly higher low for that trend continuation. So Google, similar to all other tech stocks right now, monthly full control, weekly full control, daily full control as well. I see no red flags. Now moving on to Meta. Meta also very strong here, guys. 1.26. It seems as though it was just yesterday that we were all the way down here, and I was pretty much screaming at everybody to please pick up some Meta without giving anybody financial advice, right? You got to kind of read between the lines there, especially with how hard I was playing this one down there. Looking extremely gorgeous is Meta right now. Daily uptrend continuously underway. New leg higher, marching into the all-time high levels right now. Little bit of resistance, as you can see here, guys. That is the all-time high resistance. So we will see if the bulls can get it done in one clean shot, or if they maybe have to get a little bit more momentum down here before making a second attempt. All in all, guys, looking very good. Anything above 492, just going to be looking for a daily higher low for the furtherance of the daily uptrend. Looking very strong on the weekly as well. Extremely strong weekly chart and underway right now. Even if we do get a significant pullback on the daily, let's say, this is also your weekly level too. So keep an eye on this one, guys. 492. It's a very big one. Cannot lose that one. or you risk sacrificing the weekly uptrend as well. But with this momentum, depending how Meta closes tomorrow, I would not be surprised, guys, if you just carry into higher levels, because I've been pointing out now for a while, the valuation on Meta, because of how much they're growing EPS and their free cash flow, their valuation is relatively cheap. We did it at 500. Now it's about 520. So pretty much add about, let's call it about 5%, 4 or 5% to this number right there, which should be very small, right? Maybe 1.3, 1.35 peg. Very, very, very decent valuation for Meta, even though it is at the all-time highs. I like it a lot. Moving on to Microsoft right now. Microsoft also very strong, just continuously grinding higher, pushing those all-time highs every single day pretty much. Gorgeous daily uptrend right now. So if ever this move tops out soon, we're going to be looking for a little bit of a pullback, anything at that point above 442, looking for a daily higher low for the trend continuation. However, if Microsoft rolls over and sets a daily downtrend, you guys will know that it's just for a bit of weekly consolidation, right? Look how much space we have on the weekly on Microsoft. This chart is absolutely gorgeous. Textbook technicals right there, right? Beautiful weekly uptrend. If we do pull back, anything pretty much above 406, gonna be looking for that weekly higher low for the trend continuation. So in the event that Microsoft pulls back into the previous all-time highs on the weekly, guys, previous resistance, gonna be newfound support, and the weekly 12 EMA is right there. Could be a great breakout, retest, and run. That would be a trade opportunity that I would be looking at very heavily if we do retest there. If we get there, I will tell you guys what I will be doing in the event. Moving on to Netflix right now. Netflix up about 1% on the day, looking very strong too. So Netflix is just trying for that daily trend continuation, almost there, right? And then if we do break this level right here, 689, the next level we're looking out for here, guys, is the all-time high. So looking very, very decent, as well as per Netflix's valuation, guys. We did it at about 684 after their pretty much earnings, which is pretty much where we are. Which is pretty much where we are right now. Or sorry, I didn't do it after earnings. I did it last week when I did top 10. Is the Mag 7 overvalued or not? Right. So we did it at 684 already. 1.62 peg, not that bad, even though we're approaching all-time highs. On the technicals, looking very, very, very strong here, guys, right? Just looking for that daily uptrend continuation. If for whatever reason we pull back and break 672 to the down, 662, to the downside, daily downtrend underway, and just gonna be looking for a little bit of weekly pullback, anything above 627, looking for that weekly higher low for the eventual trend continuation. Target this level right here as your first touch. Big prior resistance, newfound support, and the 26 EMA is right there. So it could just be a little case of something like this, and then maybe manifest into a second rally. Looking very, very strong on Netflix. I see no red flags at all. The bulls control everything, guys. Monthly control, weekly control, daily control as well. Just similar to pretty much all of your big tech names except for Tesla, right? Now, moving on to NVIDIA. So NVIDIA down another 2% today, but it really doesn't look like it, right? Even though it is down 2%. So NVIDIA, looking quite decent, if I had to say so myself. It just looks like the SMH chart as a whole, right? So large, so it was a very nice daily uptrend. The only problem is the bears pulled back 100% of your most recent move. Usually when that happens, the best the bulls can hope for is a little bit of a tightening range before getting a break higher. The worst case scenario is obviously doing something like this. Lower high and then the lower low flush, which would be a daily downtrend if we do get a break of 118.27 to the downside. And that would be synonymous with further weekly consolidation as well. Anything above 76.14, just looking for a weekly higher low for the furtherance of the potential weekly uptrend. So NVIDIA, although short term, it's looking very weak, just remember who's in long-term control, guys. The bulls are in long-term control of the monthly, huge long-term control of the weekly. And so far, even though we've pulled back significantly, look, we've only pulled back not even 30% of this move right here. So very, very strong is NVIDIA right now. A first line of defense, the one that I may be looking to play short puts at for the time being, maybe just between 115 and 110, right? Even though it looks close on the chart, it's really not, right? In terms of NVIDIA, that has to drop, about 12% to get all the way to about 110. So that might be one of the levels. I've been playing short puts on it a lot this week in the 115, 117 range. Next week, I may be looking maybe the 110s, right? Want to be a little bit conservative while playing NVIDIA, just because we know that we could potentially get some larger form weekly pullback, maybe coming down into the lower $100 numbers. So all in all, NVIDIA not looking too bad right now. I will continue swing trading this one. Moving on to Tesla. So Tesla trying to continue this breakout as we were talking about yesterday. Just keep in mind, deliveries are being released next Monday. Now, there's been a lot of negativity around Tesla as of lately, guys. This may just be a situation like Apple, whereby if any good news happens on the day of deliveries, if they surprise to the upside, the stock may rally a ton. So just keep that in mind. because there's just the expectation is just so negative right now, right? So nice daily uptrend, right? As you can see, we coiled up right here, broke through this level, looking very, very strong. Daily uptrend underway. As soon as this move tops out, we have a ton of space, anything above 180, looking for that daily higher low for the eventual trend continuation. Not looking too bad on Tesla at all, but as I said, Monday's delivery numbers, guys, are going to push this one hard one of two ways. If it does push it to the upside, guys, you can expect me a break of 205, and then we'll be looking to really attack this 220 level a bit higher. But if the deliveries fall short of expectations and there's bearishness around it, well, you may be looking at a retest of our prior resistance level, which is now going to be support, which is pretty much your 185, 186. The moving averages are there as well. At least this is a very large support area for Tesla, right? So not looking too bad, guys. But as I said, the price action will be heavily dependent on Monday's data. So only 2 trading days left until that day. So difficult to derive any price action before that major market moving event. Moving on to Palantir. Palantir doing a great job here today, 4.65%, right? And Palantir pretty much breaking the bears' chance at a daily downtrend. So what we're looking for here, right? Gorgeous daily uptrend expansion. Oops, the bears took back a lot, setting the lower high. And the expectation was for the bears to maybe retest these lows and maybe send us into a little bit further daily consolidation. But today, the bulls said no. New daily uptrend underway, looking very strong, which means that weekly uptrend simply continues right now, looking very strong on Palantir. No red flags at all. I continue to say here, guys, that I really do believe that Palantir has a great chance of hitting and breaking this $28 level at a certain point this year, most notably probably in the second half of the year, which is pretty much we're right into it right now. So looking very strong here, guys. If for ever which reason we come to the downside ever so slightly further, let's say technology as a whole has a little bit of a pullback week next week or the week after or something like that, and Palantir gets dragged down as well, I will want to be playing this one. $23 down to about $22 is the closest area of large support for the stock. So that is going to be where I'm going to be looking for some swing trades myself. A little bit tough to chase it up here right now because it has run a lot over the last 4 or 5 weeks, right? So that's just the way that I'm looking to play on Palantir. If I have shares right now, I'm just holding them. No real need to touch them whatsoever, guys. We're not overbought conditions to the upside, and we're also not in a position where I could be adding to them in a $23 to $20 level either, right? So kind of an in-between location for Palantir. And now moving on to PayPal. So PayPal doing a good job today of just not dying. So pretty much up about 0.19%. They revisited 57.34 here today, right? Really coming close to the bottom end of the last line of defense for the bulls. This support area, guys, is huge, 58 to 56. We cannot lose this. You want to know why we cannot lose this, guys? It is a monthly level, guys. If we lose this, it's not going to be looking for good for the bulls at all, right? So they're trying to maintain some semblance of a monthly uptrend, right? If we break 56 pretty much to the downside, that would be a monthly loss of the uptrend, and that is not good. When you have a monthly loss of the uptrend, it takes so long to get it back here, guys. Look, big monthly downtrend this entire time. Look how long it took us to get a confirmed monthly uptrend. It takes 5-6 months sometimes, right? So not the best for the stock right now. At least they're holding the short-term levels. What I really need to see from PayPal at this point in time, guys, is the bulls trying to recapture the daily uptrend. So let's see, can they get a bounce underway as close as possible to 60.7? Get me as close as possible to there. Gives the bulls the best chance at resetting a daily uptrend and start getting back some of this weekly momentum, right, that we've really lost over the past month or last 3 weeks of trading. Start giving me some nice weekly legs up, start attacking this lower $60 level once again, and give me the chance at resetting even the weekly. As of now, looking quite dicey for PayPal. I saw the opportunity today to be writing some short puts, guys, but there were other opportunities. PayPal is now pretty much taking in a back seat for me. It is not the one that I'm most favorable for making swing trades on, especially not when I see other opportunities. So this is pretty much going to be one where if I do see it maybe early on next week, Monday or Tuesday, revisit 57, 56, well, then maybe I write some 55, 54 puts depending on the premium, but I'm going to be quite greedy on this one, guys, right? Just want to get as low as possible on PayPal just because the market just isn't favoring the company right now or even fintechs as a whole. So I really want to get the best price possible. That's pretty much everything I had for you guys in terms of our Nike earnings and daily market recap. Now let's jump right into the trades that I made for the day. All right, guys, so taking a look at the portfolio positions for today, there has been a few new positions added to it. So number one, let's take a look at AMD. So AMD, what we did, just looking to milk as much premium out of this week as possible. You may remember I had the 152.5s and they were pretty much worthless here, guys. So what I ended up doing was I rolled them for one strike higher. So you can see here, let me just go find the AMD puts that we wrote earlier in the week. Let me just see right here, the 152.5s for about $1. We were able to actually close them today for a very, very juicy profit since they were almost worthless, right? Let me find them again. Here's your 152.5s. You can see I closed them for 7 cents, and then I just opened the 155s for about 19 cents. So looking to get an extra $12 until tomorrow, guys. Not the biggest position ever, but just figured I should show it to you guys. Just looking to get as much premium out of this market as possible, right? The other trade that I added, a bit of Chipotle. So Chipotle finally trading in their post-split stock price, now trading around $62. So I went 1 week out. I went with pretty much the 59.8s, which is right around this location right here, coming into a wider area of support. So I will make a little bit of a stab at Chipotle, but just keep in mind, guys, the valuation up here right now is a little bit high, even at 62, right? About 2.5 peg right now. So, you know, I'm not getting that much of a discount on this peg ratio at 59.8, but I figured I should take it just because today's drop was significant, right? Chipotle has dropped about 6% twice in the last 2 weeks of trading, and it has not done that in a very long time, guys. So probably a lot of volatility around the stock split as well. I'm just looking for maybe some oversold conditions on the 4-hour to be pretty much the bottom before a little bit of a bounce. So they were pretty much good on that one, guys. We'll see what we get. But as you can see, guys, sold 159.8 put for 31 cents for next week, which is about 0.5%. So we'll see what happens with Chipotle. Looking forward to playing this one a bit more often, even with NVIDIA too, right? Those two ones that have come from a stock split recently. Now, another thing that I did, guys, was on CRM. So I covered my CRM calls. You may remember that I had the CRM leaps right down here at about $240 calls, and we were up very, very nice today, right? We were actually up significantly today, pretty much almost $1,700 on those calls. So what I chose to do pretty much at the top, I almost got the top of it, really fortunate to have pretty much picked the top of this trade right there. I covered the calls when the market was pretty much all the way up here at around $257, right? You can see it here. If you don't believe me, here's the timestamp. Let me just put it up. So about 12:32 p.m. 12:32 p.m. on the chart is right about, let's go find it, right about here, right? So about $257, looking very good. So the one thing that I did here, guys, is I covered it. So you'll see me do this a couple times when I want to lock in the profits after such a significant rally by CRM. 4-hour overbought conditions, right? It was a 5.5% day on that point. 1 hour was blown out of proportion. I was looking for a little bit of pullback, even on the daily, guys. Great daily move to the upside, running into the moving averages here. So if ever we continue moving higher and then just slightly kind of, you know, just consolidate a little bit, I want to at least protect a lot of these gains. So you can see here, guys, I wrote them for about $15.75, one single call. And thereafter, you can see we're actually in profit on those. They're trading around $13. So already up about $275 on that hedge. All I'm looking to do is protect the profits. If the stock pretty much runs further than where I locked it in with the amount of premium that I got, guys, it's the equivalent of me locking in roughly $261 share price. So if I ever buy this short call expiry, right? Excuse me, if I ever buy this short call expiry, the stock price is above 261, well, that's fine, guys. I can just close this position, close the long call, and that'll be it. However, if it is trading under there, I will make money on the hedge call. The one thing that I don't want to do, just because SPY and the QQQs are a little bit extended to the upside, one thing I do not want to do is give back all of those gains that I've made on CRM so far. So this is just a little way to hedge those. They are in the money calls, the 245s for about 1574. So I should be protected if we were to retrace all the way down there. At least I'm securing myself $1,575 in terms of a hedge. So hopefully that makes sense to all of you. Now we're still underwater on the GIS. I'm still hesitating whether or not I should actually hold this one as part of the wheel strategy or whether I should not, or whether or not I should just cut it, right? It's a consumer discretionary stock. Their earnings were down, sales volume was down, and they're kind of running out of purchasing power, right? A lot of what they sell, cereals and stuff like that, you guys know they're very, very expensive right now. So I thought that this was a good level, guys, but At this point in time, I really want to concentrate into very high quality companies. It was an earnings play. I could have got out of this one for near close to break even. I wanted to see if it could recover a little bit more. And now, unfortunately, it's back down to the $63 level. So by tomorrow, I will make a final determination whether or not I want to hold, be assigned, and try to wheel out of this one, or if I just get out and just replace it by a more higher quality stock in a more favorable niche right now. Now, the other one we took, guys, is Nike. So we took Nike 83 puts for their earnings. This expires tomorrow. So Nike currently right now, I don't know what's happening right now because it's during the earnings call. Look, wow. Already down to 83. So already down to my assignment price pretty much. So we'll see what happens with that one tomorrow. I like Nike in the $80 range, guys, but I'm going to be very, very cautious with this one. So we'll see how I manage the position tomorrow, guys. Probably going to take it at least maybe for 1 week, no more than that. This kind of reminds me, they got crushed as bad as Starbucks did. Management probably just gave very, very poor guidance on the earnings call right now. So I'm going to have to go over the call and I'll make a final decision whether or not I want to hold Nike as well into tomorrow. And we'll see if it expires over my strike price, guys. If it does, perfect. I'll just collect all of the premium. But if for whatever reason we end below, then I'll really have to make a determination whether I just cut the loss, which is the more likely scenario. I'm kind of going to lean, if it does end up at a loss, guys, I'm probably going to lean 80% cut the loss and 20% just get a sign and try the covered calls on it, right? This was just an earnings play attempt, but as you guys know, they can go one way or the other. Now, we still have all the rest of the positions for the week. What I did also open, guys, is a few new trades here. I took a chance at some Visa 265s for tomorrow. So they're very close to Visa's share price right now. Visa's trading about 266.59. So we'll see if we get assigned at 265. I like 265, guys. It's the 200-day EMA and the lower portion of this support. I really like this level. Would not mind being assigned. I would rather hold 100 shares of Visa for $26,000. I have more confidence holding $26,000 of Visa at this level than holding 100 shares of Nike for $8,300 at that price. Just to give you an idea of how little confidence I have in Nike's ability to recover quickly, right? So that's just a little quick tidbit on that. And I also did open a few new debit spreads on Visa and MasterCard as well. Same trades as I took last week, as you may remember, guys. 1/3 of the width of the spread. $5 is the width of the spread. You can see the premiums that I'm getting right here, right? So $1.61 divided by 5, that is roughly 1/3 of the width of the spread. The rule that I always tell you guys to respect. And even the MasterCards right here also, right? We got $1.75 on those. Quite happy with those. Divided by 5, that's about over 1/3. So very, very nice here. The MasterCard bull put spread right here is between the 440s and the 435s, also right at the support level. So 440 is pretty much this line. Let's draw it on the chart. This line right here. 440 and then 435 pretty much is going to be right there. So what we're looking to do is we need the stock to close above 440, and I gave them 1 month of time, really giving enough time for these positions to play out, get that support and start rallying to the upside, right? So I got the 440, 435 put credit spread on MasterCard, and then the 265, 260s on Visa. So same concept, 265s, that line is pretty much right about, let's call it just here around the 200-day EMA. And then obviously 260 to the downside would be right around here. So what we need is within a month of time for it to close above my 265 strike. And then we just collect all of the profits, right? So we're looking for a bounce trade on those. Looking pretty good as of now. I like my entries. We will keep a close eye on that. That's pretty much all the updated trades for today. And there was a few that I closed. As you can see, CELH, we closed those for about 85, 90% profit. Enphase as well closed for 85% profit. Fortinet as well, same thing, closed for 85% profit. And obviously the Micron earnings play that we did yesterday, very, very successful trades all in all, guys. So if you remember these from yesterday's video, they were now all closed. So very, very decent week of premium generation. As for the total balance of the week and my performance year to date, we will take a look at that tomorrow when we wrap up the week's trading. So hopefully you guys enjoyed today's video. That's everything I had for you guys. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider also subscribing to the channel. If you're new here, we do these daily market recap videos every Monday through Friday after the close. So I hope to see you back for many, many more with me. And then guys, if you have any questions, as per usual, feel free to leave them down below in the comments. Anything you want. If you want an opinion on a stock, technical analysis, an options play that you're considering, macro discussion, anything you want, leave it down below in the comments and I'll be happy to answer you, no problems at all, usually within the first 24 hours. So take care, guys. I will see you tomorrow after the close. Happy trading to wrap up the week. Peace.